Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings in corporate filings and try not to fall asleep doing it, which is a real challenge with some of these documents. Today we are diving into a quick update from Advent Technologies Holdings Inc. While this isn't a lengthy financial report like a quarterly or annual filing, it still has some interesting pieces of the puzzle that tell a story, especially when you look at the context. This filing is basically an announcement that Advent Technologies has secured some new funding. It's a bit like getting a new credit card, but for a much bigger amount and with more complex terms. They've entered into an agreement with Hudson Global Ventures LLC to get a loan. Let's get into the deal itself. They received a loan as evidenced by something called a convertible promissory note. Think of this as a loan that can potentially turn into ownership of the company later on. The principal amount of this loan is $235,000. Now, importantly, there's an original issue discount of 12% per year. On top of the loan, Advent Technologies is also issuing something called a pre-funded warrant. This is essentially an option for Hudson to buy shares of Advent stock at a very, very low price. Just to 0 point, this pre-funded warrant also comes with some special rights. For instance, if Advent issues more stock later, Hudson might get more shares or have special rights to buy into new offerings. This detail about the par value of their common stock being $0.0001 per share is typical for a company that has many shares outstanding. It's more of a legal accounting value than anything related to the actual market price of the stock. Now, it's interesting to look at their other outstanding warrants, like the ADNWW1s. These were for purchasing common stock at a much higher price of $345. The new warrants with Hudson are at a fraction of that price, showing a significant difference in the underlying value or perhaps the circumstances under which these were issued. The fine print of this note is quite extensive. Hudson has the option to convert the loan amount into shares of Advent's common stock. The price at which they can convert, called the conversion price, can be adjusted. These adjustments can happen for things like stock splits, dividends, or if the company issues more shares in a way that's considered dilutive, meaning it could lower the value of existing shares. This is a common feature meant to protect the investor if the company takes actions that might devalue their future equity stake. A significant aspect of this agreement is what happens during a fundamental transaction. This refers to major events like a merger, a sale of all company assets, or if a third party acquires more than 50% of the company's stock. In such scenarios, if Hudson exercises its pre-funded warrant, it will receive shares of the successor company or the company that bought Advent, based on what current shareholders would receive for their stock. This is a standard protection for warrant holders in case of a major company change. So why did Advent Technologies need this loan? The filing states they plan to use the money to pay off a financial obligation related to a settlement of a $12.25 million claim and also for general working capital. This is a pretty important detail because it suggests the company is dealing with some substantial liabilities. Let's look at that claim mentioned in item 1. It seems Advent Technologies entered into a settlement agreement related to their subsidiary Advent Technologies ASCs, which is described as a bankrupt subsidiary. For 100,000 euros, essentially Advent Technologies is buying all the assets of this bankrupt subsidiary for 100,000 euros. This settlement is expected to remove a roughly $12.25 million liability from Advent Technologies' balance sheet. That's a pretty significant chunk of debt or obligation that they are clearing. It seems they had to get this loan from Hudson to manage this settlement. This highlights a critical need for cash to resolve past issues. Advent Technologies is listed on the Nasdaq under the ticker symbol ADN. Many investors watch these filings closely to gauge the company's financial health and operational direction. The report is signed by Gary Herman, the Chief Executive Officer, which indicates this is an official communication from the top leadership. Now let's put this all together. Advent Technologies is in a situation where they need cash to settle old issues, specifically a large claim related to a bankrupt subsidiary. They've secured a loan with high interest and a potentially dilute at a low price. While this loan might solve an immediate problem by allowing them to clear a significant liability, it also comes with costly terms and potentially dilutes ownership for existing shareholders if the company stock performs well in the future. It's a bit of a tightrope walk. They are fixing one problem by potentially creating future financial obligations, or dilutions, or dilutions, or dilutions. Or dilution for if we heavily dive a tightrope. Walk, they are fixing one problem by potentially creating future financial obligations, or dilutions, or dilutions, or dilutions, or dilutions, or dilutions, or dilutions, or dilution. Our take is that Advent Technologies is actively managing its balance sheet, trying to clear significant past liabilities. The need for this specific loan, with these particular terms, suggests that traditional financing might have been difficult to obtain, or perhaps was not as favourable. The high effective cost of the funding, when you factor in the discount and the interest rate, reflects the perceived risk by the lender. For investors, it's crucial to monitor how efficiently the company uses these funds to get back on a stable footing and how they manage the dilution from the warrants. A key risk here is whether the company can improve its operations enough to outpace the cost of this financing and the potential dilution. The successful settlement of the $12.25 million claim is a positive step, but it uses up a significant portion of the new funding, leaving less for general working capital than one might hope. Alright, that's our breakdown of Advent Technologies Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.